market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone. Happy Monday and welcome to The Pulse. I'm Francine Lacqua here in London. Now, President Donald Trump has called for boosting U.S. dominance in AI with an executive order scrapping former President Joe Biden's approach to the emerging technology. However, Chinese AI startup DeepSeek has rocked global technology stocks, really raising questions over America's tech dominance. Buzz grew over the weekend about the company's latest AI model being cost-effective while running on reduced capability chips. Now, for more on all of this, let's bring in Bloomberg's EMEA News Director, Ross Matheson, also with us to talk markets for the next 15 minutes, Emmanuel Cau, Head of European Equity Strategy at Barclays. So thank you both for joining us. Ross, what a way to get started on a Monday. I mean, this company, if you're in the know, you knew that this company had something to offer. You knew that this challenges the U.S. Can Donald Trump do anything about it?
What's interesting, as you say, it feels like this company came out of nowhere, but in a way it shouldn't be that surprising that it has, because China's made very clear as part of its priorities with tech, it's really pushing self-sufficiency, and that's a really aggressive approach to AI, not just chips, but AI. And you can see that they've been working very hard on this. So in a way, this is not that surprising, but obviously the reviews are very positive on it so far for this company, for its product, and putting into question the very high valuations of some of the tech companies around the world. And really a message to Donald Trump out of this is we are pushing hard on self-sufficiency, whatever we're doing to realign global supply chains, to squeeze China out, to reroute some of our supply chains. China is still there and still being very busy and very much making this a national priority. So where does that leave Donald Trump? What does he do with AI companies in the US? How does he support them? I mean, he's already saying he's going to unshackle regulation and they should just go for it. But separately, what does that look like? So really quite a startling development when it comes to the US-China relationship in the tech space.
And I want to come to the markets in a second, but Roz, I feel like the news cycle will really be dominated by AI and Donald Trump on the geopolitics. So we saw Donald Trump impose then rescind tariffs on Colombia because he got what he wanted. Is this going to be, are we going to see countries after country do the same?
Very much a reminder of how he's going to dominate. I mean, it was quite a dizzying turn of events over, 12 hours or so, where he said he was going to impose tariffs and sanctions, and then in a way he stepped back, sort of reversed on that as Colombia reversed. And the point of contention there was really not so much about sending people back, but the way they were being sent back, putting them in shackles and chains. And obviously they reached some kind of understanding on that. But just how quickly Donald Trump was ready to say, fine, I don't like what you're doing, so I'm going to put tariffs on. Here we go. And immediately. And maybe you can do that with Colombia, a country like Colombia, and you can negotiate your way out of it. But what happens if he tries to do that very quickly, almost on a whim in a way, because he doesn't like what another country has said or done? If he does that to Germany or France or Canada or Australia or the UK, how those countries might react, or China, could be very different. And so when you're doing stuff on the fly in a way which is really significant for the global, supply chain, for trade, for economies, for politics, and making those decisions very, very quickly. I mean, interesting to see he was willing to roll it back again very quickly. He does like to change his mind, but that's just going to keep everybody on their toes going forward.
Emmanuel, what does this mean all for the markets? Again, with your AI lens and technology lens, if you're in the know, that we knew that this would have put a race between China and the U.S., but stocks in Europe are getting slammed if you're tech-related today.
Indeed, but I think tech has been very central to the U.S. exceptionalism, and I think this moment had to happen, right? We know that at some point new entrants, cheaper entrants, will challenge the dominance of some of the big tech companies in the U.S. So I think this is a reality check. This is going to force investors to see tech not as a one-way trade anymore. I think it could end up a great buying opportunity because it's very early to say whether DeepSeek is going to be completely changing the model or not. We still don't know how much we need to power DeepSeek, etc. But I think for the time being, it gives a chance to the non-tech heavy equity market, and Europe is shining today. Europe is down a little compared to the US. So as long as big tech in the US is being challenged, I think we can see a little bit of catch-up for non-tech in heavy markets. And again, this is putting diversification back
Right.
at the center of the investment process. People forgot about diversification, and think people will think about having non-tech exposure as well in their portfolio.
But ASML is also getting slammed today, right? I know it's a smaller percentage than what the Magnificent Seven are for the U.S., but do you assume that all tech stocks now are priced to perfection, and so we could see a lot of volatility if they get challenged?
Yeah, I think the valuation gives very little cushion to the space, so you are left with earnings to do the heavy lifting. It's a very busy week for tech earnings. We've got ASML on Wednesday, SAP tomorrow, big tech in the US later this week. So I will not get carried away. There's a bit of sell first, think later type of market behavior today. Again, positioning is very heavy on the space, but I think the earnings story for AI is still not over in my view, right?
I mean, Europe will probably at some point have to confront Donald Trump with extra tariffs or very harsh words. Actually, it was incredible to see Donald Trump and Keir Starmer get along over the weekend, right, in this phone call since he entered the White House. How do you play that?
Well, we think Trump is kind of unpredictable, but transactional. He wants to use trade tariff leverage to bargain to get something from Europe, whether it's more buying of energy, LNG, more defense spending. So our assumption for this year is that Trumponomics won't be as aggressive as what Trump has been talking about. So the implementation will be softer than what has been threatened by Trump. But look, this is going to create volatility along the way. But I think week one was a little bit of relief with tariff not being implemented. And as we saw with Colombia yesterday, there is still some room for negotiation here.
Roz, I mean, we heard, the Gulf of Mexico now being called the Gulf of America. I know Elon Musk also tweeted about the channel, the sea, being called, I think, the George Washington Sea. I mean, is that just noise?
In a way it is. I mean, some of this is stuff that you can say you want to do, but can you actually do it? Or can you get tied up in a whole lot of red tape and legalities to get something done? I mean, it obviously plays very well to your voting base to be saying these things. I mean, someone was calling for Trump to already be chiseled into Mount Rushmore, I saw on the weekend. And again, the ongoing stuff about Greenland. I mean, we saw fresh noise on that. I mean, that actually is a very tricky relationship that Denmark's going to have to manage in this. And we can see that Trump's not going to let that one go because he's been told by somebody about how big it is and it's full of minerals and so on. And so he wants to see what the US can leverage out of that, to the point that man was just making about leverage with Trump. It's all about that. And so that is something that's very real. I mean, all jokes aside about Greenland and Trump and so on, he's definitely got an agenda there.
I mean, it doesn't matter to earnings, or does it? So we have fourth quarter earnings. Do we start seeing chief executives worrying about the geopolitics, or is this going to be a straight earnings season?
Look, I think there is no reward for CEOs to commit too much to a very strong guidance for this year. I think there's a lot of uncertainty, a lot to pay for. But look, I think the macro backdrop is pretty decent, right? For the time being, rates have gone up, but they're quite stable now. Trump seems to be a bit more willing to negotiate. We see some green shot in European data. There is clearly some animal spirit in the US. We see business expectation really picking up. So, of course, there is uncertainty. There is always uncertainty. But I think the private sector should still be pretty confident about their look, even though, maybe not all of them will commit to very strong guidance and forecast for this year.
Okay, thanks so much, Emmanuel. We'll come back to you, and we'll also talk a little bit more about your play on cyclicals. Emmanuel Cau there from Barclays stays with us, and thank you to Bloomberg's EMEA News Director, Roz Matheson. As you've heard, plenty more to come, and this is Bloomberg. We talk a lot about tech today because of the surprise by DeepSeek in China, really putting in question the supremacy of the U.S. in AI for much longer. And so maybe this is oversold, or not oversold, but maybe oversold. Nvidia down 6.8%. So we'll have to see, of course, pre-market, how that adjusts. Still with us, Emmanuel Cau, head of European equity strategy at Barclays. Emmanuel, I mean, it's very clear we're dominated by AI, and there's one show in town, and that's Donald Trump. Yeah, I mean, look, on equities, you were very clear that Europe could maybe benefit from some of the air taken out of the U.S. But what's your take on what Trump does in terms of tariffs, what it means for the Fed and inflation?
So we said at the beginning of the year there are three key words for 2025, Trump, AI, and rates. So here we are. We are not disappointed so far. Look, I think our base case for Trump is that action will be softer than words. whatever that means. It might take time to find out what it will be doing, but we don't see mass deportation. We see less tariff than what was planned initially, and we don't see new tax cuts, right? So Trump inherited a very high equity market. Rates are very high. Dollar is very high. So this U.S. exceptionalism is quite fragile, and I think there is very little margin for error for Trump, right? So if something goes wrong, he can easily take the market down or push up interest rate. So he told us last week in Davos he wants rates to go down. Well, a lot of his policies are inflationary. So I think it would have to be balanced by disinflationary policies, right, for example. So, look, I think it's very early to say, but our view that pragmatism will prevail, and ultimately U.S. exceptionalism cannot go too much at the expense of the rest of the world. And for Trump to really strengthen the U.S. economy, he will probably have to compromise on trade, tariff, or some of the global policies.
I mean, this is a big worry, right, that it's really winner takes all. And I've even heard, some calling the U.S. like a predator right now. So what that means for Europe. Where do you see deals in Europe?
Look, I think there is willingness for Europe to compromise, whether it's on more defense spending, more energy import from the US. I think this is going to force Europe to take care of itself. I think deregulation is going to be the new theme for this year. Obviously, Europe may have to follow the lead from the US. And look, no one will talk about the Draghi report. It came out 3 months ago, and I think the Draghi report will be back on the table. It's full of very interesting, pragmatic proposals, which are not necessarily very costly to implement. And I think Europe will need to come together to, fight against the US. And look, I think the German election in this regard could be a catalyst, because if you see a shift toward a bit more pro-growth, pro-reform change in Germany, I think that might open the door to a stronger European leadership, which can basically negotiate or bargain with Trump.
I mean, is the money there? So the Draghi reports talk about competitive also in finding money. Do you see, money in companies but not being spent because of the questions they have? Yeah,
I think there is a lot of uncertainty forcing companies to focus on capital preservation and cost management. But look, like what we are seeing in banks, for example, we start to see M&A cross-border deals. So I think the private sector is in very good shape in Europe. Governments less so, but corporates have the ability to get stronger, right? So I think there is money in the private sector. There is money in Germany. Germany has fiscal capacity. They can spend more to grow their economy. And again, a lot of Draghi's proposals are not necessarily expensive to implement. Deregulation can be a very cost-effective way to boost your economy. It's going to take time, but I think we need to get there if you want to compete with the US.
We had, I guess, a glimpse of, for example, the resurgence of luxury stocks last week. That was due partly in China, but also millennial spending. I know you're also focused on cyclicals. How much does it really depend on what sector you're at or what kind of a strong company you have?
Sure. I mean, we want to own cyclicality in this environment. We think the U.S. will export strength to the global economy. We see some green shoots in Europe. Disinflation should help the consumer. So we like the consumer as a global team. We like the top-end consumer in the US, which is why we went back to luxury at the end of last year. We like the low-end consumer in Europe. It's very much a play on lower interest rate and disinflation. Look, I still believe some of the secular growth team in electrification, tech are still there. But of course, they are very consensus, very expensive. So you have to diversify away from that. That's why we like financials very much. We think financials are back in the game, whether it's insurance, diversified financials, banks.
European ones?
Yes, European ones, absolutely. They benefit from a broad reflationary impulse, but I think the price to pay is not very high in Europe, and you have this corporate activity, self-help potential, whether it's buybacks or M&A, as a bit of an addition to the macro drivers behind it.
But, Emmanuel, is this basically taking advantage of collateral benefits of what's happening in the U.S.? Because regulation here will, if not loosen, certainly, I guess, take a pause.
Look, that's obviously a call on that. I think a lot of banks in Europe might benefit from looser deregulation in the US. The boom in capital market activity, M&A, but also I think, and again, coming back to this M&A team in Europe, banks, I think that's something that might open the door to more sector-friendly type of policy environment.
But what's the one thing that you worry about for this year?
Look, AI is very central to the structure of the market. We like the long-term growth aspect of the team, but the positioning and the valuation are quite expensive. And obviously, there is a lot of money parked in this part of the market, right? So if something goes wrong, if this is basically a bubble, then you can see a bit of a domino effect on market. That's why you need to be diversified. And I can see some merit being in Europe in particular, as a way to hedge this big tech dominance in the US. So that's something to watch. As I said, Trump, number 2, and rates number 3. We've got the Fed meeting on Wednesday, ECB on Thursday. Look, our assumption that inflation will be down, so we are in the disinflation trade, but it's not linear, it's not smooth, and obviously rates are close to 5%, which might become an issue. If rates break above the 5% threshold, I think that's going to start to hit the equity market again, so something to watch.
Emmanuel, thank you so much. Emmanuel Cau, there, head of European equity strategy at Barclays. Now, coming up, German companies unexpectedly became more pessimistic at the start of the year. That's according to data from the IFO Institute. So we'll discuss all of this with Clemens Fuest, the IFO Institute president, next. And this is Bloomberg. So German companies unexpectedly became more pessimistic at the start of the year, with the IFO's Institute Expectation Index falling to 84.2. So let's get straight to Clemens Fuest, the IFO Institute president. Mr. Fuest, as always, thanks so much for joining us. Look, in his first few days in office, Donald Trump has clearly again threatened Europe with tariffs. How bad could the consequences for Germany be?
The consequences could be very bad. Germany is an export-oriented economy. At the same time, currently exports are struggling. We see in today's IFO index that companies are reporting a further decline in incoming orders. So the German export industry, which used to be very competitive, is struggling currently. So tariffs on top of that would be very bad news indeed.
The German economy already shrank for a second consecutive year in 2024. How big is the risk of another contraction in 2025?
The risk is clearly there, and whether that happens will depend, among other things, on what Donald Trump does and how the Europeans react. We currently expect a small growth rate, a small amount of positive growth, but there's a lot of uncertainty around, so it's not clear that's happening. I think the overall picture is that the German economy is stagnating. So it's, the growth rates have been negative, but very small. It's more of a stagnation. And of course, it would be very important to get out of that. But with Trump increasing uncertainty, with political uncertainty in Germany due to the elections ahead, companies wait before they invest. So it will be another difficult year.
What should the top priorities be for the next government?
The top priority is to come up with an economic reform program that addresses some structural issues: energy prices, high taxes, regulation, bureaucracy. These things need to be addressed so that investors get more confidence and are more confident to invest in Germany. We need a consistent economic reform program. This is needed more than short-term stimulus.
Thank you so much for joining us. Clemens Fuest, there, president of the IFO Institute, with, of course, a lot going on looking ahead to that election in Germany, February 23rd. Now, coming up, global tech stocks extend losses as Chinese AI startup DeepSeek sparks fears over American dominance of the industry. That story's next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Nasdaq futures and global tech stocks extend their losses on fears the AI race may no longer be America's to lose. Now, Chinese upstart DeepSeek unveils a cost-effective model that runs on less advanced chips. While President Donald Trump announced sweeping tariffs on Colombia before abruptly pulling the threat after reaching a deal on the return of deported migrants. Plus, Bitcoin dips below 100,000 as traders take profits just days after President Trump's executive order for the crypto industry. So back to our top story, and ASML shares have tanked along with global tech stocks. Nvidia leading falls in U.S. pre-market. Now, it comes amid concern that AI models from DeepSeek would disrupt U.S. technological leadership. Let's get more with Tom McKenzie, our Daybreak Europe anchor. So, Tom, I mean, this feels like a big deal because actually the people in the know knew that, there was fierce competition from China and that they could come up with something like this. But it seems the market was oblivious.
Yeah, I mean, as our team at Bloomberg Intelligence have been saying, they've been looking into this company for 7 months. But they have come out with this new model. It is open source, so you can see all of their less than secret source in there. They are opening it up. It poses some really important questions, and that's what the markets are grappling with today. One question it doesn't pose is whether or not AI innovation is going to continue. That question has been answered. AI innovation will continue. It may even accelerate as a result of this. The questions it poses are, does Nvidia still, with the market valuation that it has, still command that role as the chief supplier of these AI accelerators? Is it still that essential company? Because if DeepSeek is showing, and the data suggests it is, that it can build a model that has the same capabilities of OpenAI and Anthropic and DeepMind with chips that are older, using systems engineers, so they've built a model, very sophisticated, at their research lab, that has the same capabilities but uses cheaper and older chips, then what does that say about Nvidia and its Blackwell AI accelerators, the most cutting-edge AI accelerators? Are those needed if you can build capabilities on cheaper legacy chips that seemingly DeepSeek has done? So that is a question it raises. And then again, it raises the question around the competitive challenge and the gap between the US and China. And that seems to be what the markets are grappling with right now. But the primacy is the focus on Nvidia and the hyperscalers who have committed to spending around $80 billion. And only on Friday, Zuckerberg came out and said Meta is going to be ramping up its capex higher than analysts had expected.
Tom, thank you so much. Tom McKenzie there with the very latest on DeepSeek. Now, my next guest says AI was a massive driver of returns last year, but the real test going forward will be on productivity. Is AI helping businesses control costs, increase output, or both? Well, joining us now, Piers Hillier, Chief Investment Officer at Royal London Asset Management. Piers, thank you so much for joining us. I mean, it feels like the price to perfection, and some say, look, it's about time that the Magnificent Seven got a bit of a shaking from China, because it would also put Europe on a better footing. But where are you on AI right now?
Look, I think it's a really important breakthrough. If I think in our own company, we're using tools actually to enable us to make better decisions, to operate faster, but it's still, I think, very much at the sort of early stage in its application. So the challenge this morning, in some ways, is there a threat to the sort of the hegemony that everyone has assumed to date, driven by Nvidia, etc. And look, you've got most of the major players reporting in the next week, which will give you a sense of where capex is, and that's been the real driver of Nvidia. And fundamentally, that company, the underlying earnings have grown 11-fold, shares are up 7-fold. So it's not as though you've gone through sort of a big re-rating. And a lot of people say to me, "Are we at a sort of dot-com bubble type scenario?" And there are scenarios of that. There are a couple of companies that have those kind of 100+ earnings multiples. But when it comes back to looking at AI, our view is that yes, everyone's now understood that it's going to be really important, but it's trying to understand, now that that's a sort of well-known and well-trodden path, and we'll continue to monitor growth there, and we still do play in that space. It's more just a question of how do we and you and others in industry use this? Is it effectively a cost-controlling function? Does it enable additional innovation? So one of the things we found really interesting talking to healthcare companies is actually the speed of throughput through phase 1, phase 2, phase 3 in terms of productivity. Those gains can be really, really significant in terms of the cost of drugs and drug delivery, as an example.
Yeah, and this is like about the protein folding, and for example, they do AlphaFold. There's a large language models, there's generative AI. Are we bundling everything together without? There will be winners and losers, and so unless you have a clear blueprint of what the future in AI looks like, it can get messy along the way.
Yeah, I use the analogy, sort of if you go back to sort of 2000 and everyone just assumed that the use of the internet actually has not, I mean, yes, there have been the technology companies that have been winners of that, but actually the biggest winners are probably you and I in terms of how much more efficient our lives are, the telephone in your hand, in terms of the things you do with it and its productivity. The same scenario in some ways plays out with AI in terms of enabling you to make better, quicker, faster decisions. So to me, that's the iteration from here. Now, have I really seen something that's wows me? And I look at so you've got an iPhone, I've got one too, right? But if I look at sort of AI in the iPhone, is it a real breakthrough? I want to go and buy the iPhone 16. Is it that convincing to me? And my best barometer actually are my children, who are probably better users of these things. yes, it's interesting for them at this stage, but is it a real breakthrough in terms of, do I see something them showing me go, wow, that's a real transformational piece? No, I've not seen that in the consumer space yet. Where I am seeing it, though, is actually in business applications. So a lot of the classic sort of control functions, a lot of the sort of, where we've had task-based activity, those things being automated, and actually the security of record keeping as well has been another step forward. We've been using something around how do we evidence our ability to engage with companies, and how do we show that to clients? And we can look at across all of the asset classes, so how we interact with businesses, whether we rent a building to them, whether we're actually investing in their equity, or whether we lend money to them. We can see our interaction with that company. We can talk to clients about how we're engaging, how we're delivering better outcomes. And that's really quite fun when you get all of your team, it's our ops team, it's our distribution team, it's our front office investors coming together, and we use something called the hackathon to do this. And to me, we're still at that early foothills of innovation.
Piers, when you look at a lot of inflation concerns surrounding the second term of President Trump, I mean, is this really what it's all about? So what happens to dollar, what happens to tariffs, and whether the Fed can even cut this year?
Well, I think you make a really good point there, because actually the state of the US economy is pretty good. And I think this is the problem that Donald has, is the reality that actually, Powell has got a really fine balance to tread between an inflationary backdrop that's actually still strong, wage inflation. It's stronger here actually in the UK than it is in the US, but it's still pretty strong. Japan has got the same problem. Why are they raising rates? Because actually wage inflation is going up. That's the structural piece. Why we've talked about higher for longer in terms of interest rates has been this nervousness that we haven't really solved that problem yet. So I think we're much more of expectation that the Fed waits to see a little bit more about what happens. Now, on the tariff side of things, I think it's a classic thing that you put these threats in. It's the art of the negotiation. It brings you to the table. How can we strike a deal? Now, look, I mean, the Colombia one last night was nothing to do with tariffs.
Is it the blueprint?
But it is a sense of how do I bring you to the table to have a sensible conversation? And I think, look, what was an interesting change last week, having really been quite scathing of the Starmer government, actually a much more positive tone, and possibly being the first visit outside the United States to come to the UK, says something about who are the people we want to do business with. And I think, Keir Starmer and as you heard in Davos last week from Rachel Reeves, they want to try and evidence the UK being open for business. And I think that message to say, look, we'd like to do more trade with you. Actually, you've got a trade surplus with us, not the other way around. It's quite an important start.
It's an important start, but it must be very difficult to separate the noise from the fundamentals when you make business decisions, right, when you're investing in the market.
It is, but if anything, it probably is more likely links to that onshoring piece that we talked about for a long period of time. And I think there is still, even with the AI breakthrough in China today, there will be a degree of concern and nervousness behind that in terms of the monitoring that takes place. So the message around bringing it back to the United States remains. I think Europe has to lean in and think about how do we do more with the United States? How do we tackle this issue? And if Trump manages to convince Ukraine and Russia to come together in the way that he's achieved in the Middle East, Europe needs to make sure it's been part of that narrative. And that will really help us in terms of more trade with the United States, not less, the tariffs being smaller rather than larger.
What are you expecting dollar to do in this? And again, if you get dollar right, probably you get 95% of your investment strategy right.
I think that's right. I mean, the dollar's been pretty strong for a reason, because actually you don't really need to cut rates. I mean, we're teaching here in the UK as to whether we should cut or not. Europe clearly should be cutting, right? And so that's why you've had dollar strength. For me, the thing that changes away from dollar strength will be either because Japan has to keep raising rates, and so you get a degree of yen strength for the first time in 3 years, or actually economic growth starts to improve in other parts of the world, and we've not seen that yet.
Are you expecting that, or is it,
I think so.
The US takes all?
Yeah, I mean, yes, the wage inflation bit, it's always the last domino to fall, but it's been stubbornly strong. I mean, here in the UK, when we put through, minimum wage increase of over 6%, that feeds through to the lower levels, and then you tack on, national insurance increases. It does make it difficult for businesses to continue to invest when that inflationary backdrop is real.
Piers, what's your take on the UK? John Micklethwaite spoke to, of course, the business secretary and the chancellor in Davos. I mean, it was a market-moving interview, because we also got her thoughts on, non-DOMs and the fact that she's a bit more flexible maybe than people thought.
Look, I thought it was a great interview. It was probably, it was a standout from last week. Really, in terms of giving an insight, a total change of narrative. So ever since the budget, the consumer confidence data, business confidence data, all been negative because of the costs associated with the budget. Those steps that had to be taken. We always knew it's going to be painful in year one of a new new government. It's the kind of thing you do, and then you ease the pain as you get close to the next election. But this is really important this week in terms of what they talk about growth. How do you show an evidence that the UK is open for business? And for us, as Royal London, a critical part for us is we help people save for the long term. Pension reform is really, really crucial. If we can increase the pension contribution rates, and incentivise investment into the UK, actually, the UK economy could grow very quickly from here.
OK, Piers, so good to speak to you. Thank you so much for coming on today. There was Piers Hillier, Chief Investment Officer at Royal London Asset Management. Coming up, Ryanair shares jump after a stronger than expected performance in the third quarter. We'll have plenty more on that next, and this is Bloomberg.
Wednesday, the Fed decides.
The Federal Reserve has gone from projecting 4 cuts in 2025 to just 2.
The road may be bumpier than folks thought.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
How divorced can you say you are from the global market? How much can you talk about American exceptionalism?
This is not a snooze fest. There's a lot going on here.
Could not agree more.
Tune in to Bloomberg Surveillance, the Fed decides, starting at 1:30 p.m. Eastern.
I've seen notable improvements on the ground. Things are definitely improving. The quality of the fuselages coming in from Wichita Spirit, much improved. So I'd have a high level of confidence that the additional 9 aircraft that we need this side of the summer to get to 181 game changers and that to deliver those 206 million passengers will happen. I'd equally have a relatively high level of confidence that the remaining 29 aircraft in our 210 order book will be delivered ahead of next summer, the summer of 2026, which will enable us then to catch up a lot of the growth that we've lost this year to get to 215 million passengers. So I think Boeing have turned the corner. On the production side of things, they fixed their balance sheet last year. The management team are executing on the plan. Of course, we're disappointed that we're going to be left short aircraft again this summer, but we are operating into a capacity constrained market. If you look at the Airbus operators, they're behind on their deliveries. They've got the issues with the Pratt & Whitney engines, so I think capacity is going to be hugely constrained this summer, our own included. We had hoped to carry 210 million passengers. We're now carrying 206, so that potentially I think will be a positive for fares into the summer going forward.
It's the second time that you've lowered the passenger growth target.
It is.
Is that it? Are we done?
Yeah, as I said, I'd have a high level of confidence that those aircraft will come in. I saw a number of them in the factory when I was there. The rest are either on rail carts or manufactured, the hulls in Spirit and Wichita. So they're good to go. We can physically see those 9 fuselages at this point in time. And then it's a case of getting, as I said, the remaining 29 in ahead of the summer of 2026. Ahead
of the summer of 2026, that's the additional 29. But you're getting 9 before the current summer season.
We get another 9 in with 172 game changers out of a fleet of 609 aircraft at the end of December. So we get another 9 aircraft in ahead of peak summer.
What is demand looking like?
Demand is very strong. It's robust at this point in time. People are still as keen as ever to get away, and we've 164 new routes out of 2,600 routes this summer, all booking well. Now it's too early to call where the final pricing will come out, but I'm pleased with what we're seeing so far.
Neil Sorahan there, Chief Financial Officer of Ryanair, speaking to Tom this morning. Now, the airline also revealed it's cutting its passenger growth target for a second time in 3 months amid Boeing delays. Well, meanwhile, the UK Chancellor Rachel Reeves has hinted she's preparing to greenlight a third runway at Heathrow Airport despite cabinet splits. Well, Bloomberg's global lead, Benedict Camel, joins us now. Benny, thank you for joining us. So Ryanair's share price ticking higher this morning. Why is that?
Well, if you listen to what the CFO just said this morning to us, there's a lot of confidence coming from him. He said he's confident about the outlook. The demand is robust. People are still traveling. With regards to Boeing, that's their sole aircraft provider. He said they've turned the corner. He was recently up there on the West Coast in Seattle, checking out the progress. And he said, I'm liking what I'm seeing. The company has improved overall. So really a very positive picture coming out of the airline. Yes, they have cut their growth target for passengers, but it's not their fault. It's because they're not getting the aircraft. And if you turn that on its head, it means that the demand is there, the capacity isn't, and that means they can probably command higher prices. So again, people are choosing, investors are choosing to look at this as a glass half full kind of situation, and you see it in the stock price this morning.
Benny, remind us of the issues facing Boeing and their effect on airlines.
Well, Boeing's been through a very tough year, and they had the strike towards the end of the year. That really pretty much stopped production for the entire quarter. And Ryanair is the only they only buy Boeing aircraft. They don't have any Airbus, so they are really dependent on Boeing delivering these aircraft, and that didn't happen last year. It had been slow before even that strike, but that really exacerbated things. So as we heard this morning, they're not getting the number of aircraft they need. That means that they have to take some routes out of the network, they have to reallocate some aircraft, and as a result, they can't really serve all the routes that they wanted to. But again, the constraints are everywhere. It's not just Boeing, it's also with Airbus. They've had issues getting the aircraft to the customers. This remains a very hot market. People want to travel. People want to go on these short getaways. You're seeing it in the numbers, and the capacity isn't there. The aircraft aren't there. But for the airlines, that means that they can command higher prices, and that's why people are fairly upbeat about the stock price this morning.
Benny, meanwhile, UK Chancellor Rachel Reeves also hinted at building a third runway at Heathrow. What obstacles is she facing?
Well, this is a long-running saga, really, the Heathrow expansion. I mean, I've been covering this industry for more than a decade, and for all that time, there's been talk of a third runway. There's been talk of actually building a new airport elsewhere, Boris Island it was called at some point. So, I'll believe it when I see it. This is a complicated thing to do. There's a lot of regulation, there's political opposition. This is a very densely populated area in South London. A lot of people don't want more aircraft noise overhead. So she will run into all sorts of issues here on the political front, on the financial front, on the actual planning front. This is not Istanbul or Dubai or Doha, where you can sort of say, I want a new runway, and it happens very quickly. So these things take a lot of time. I thought it was interesting hearing from her in Davos last week, where she sort of tried to put a brave face on it and say, we can't always say no. We need growth. This country needs growth. And airports are one key trajectory towards that kind of growth. So whether she gets her way, that's another matter. But certainly Heathrow is a crown jewel with everything that has to do with growth in the UK, and the UK will be keen to protect that.
Benny, thanks so much. Bloomberg's Benny Camel there on everything aviation. Now, returning to our top story this morning, Chinese AI startup DeepSeek is rocking global tech stocks and raising questions over America's technological dominance. You can see quite a lot of pressure intraday for ASML, for example, down 10%, but also ASM International down 14%. U.S. tech pre-market, Nvidia not having a great day either, and so many questions about what this means for their more sophisticated chips. Longer term, Nvidia pre-market down 9.7%. Coming up 4 weeks before Germany's snap election, and the political temperature is rising as tens of thousands marched across the country over the weekend to protest against the AfD. More on that next, and this is Bloomberg. Well, tens of thousands of people marched in German cities over the weekend in protest against the far-right AfD party. Meanwhile, Elon Musk, who has been a vocal supporter of the AfD, made a surprise virtual appearance at the party's campaign launch on Saturday. Now, for more on this, Bloomberg's Christoph Rauwald joins us. Christoph, good morning. So Elon Musk weighed in on the German elections again over the weekend. What were the reactions on the ground?
Yeah, good morning, Francine. This was actually, he made some remarks that again caused quite a few waves. As you mentioned, he addressed via video stream a party gathering of the AfD that was happening over the weekend in the eastern German city of Halle. He essentially reiterated his support for the AfD and for their chancellor candidate, Alice Weidel, who is basically at the moment second in the polls behind the conservative leader Friedrich Merz. And the comments from Merz that actually ruffled some feathers were some comments that he made after he reiterating his support. And those basically made a point that German citizens or German people should maybe not worry so much about historic responsibility and what happened in the past in German history, but also essentially look more ahead. And that, of course, has been a highly controversial statement, given that political leaders this week meet in Poland to commemorate the 80th anniversary or the ceremony to basically commemorate the liberation of the Nazi death camp in Auschwitz. So the timing and the context of these stories, of the comments that Elon Musk made in Eastern Germany, were highly complicated, I would say.
Christoph, the German opposition leader Friedrich Merz has also caused headlines with proposals to fight illegal immigration. What are the main points?
Well, his main point is essentially that he wants to crack down much tougher than what has Germany done so far in terms of stopping illegal immigration into Germany. That includes one filing which he plans to push forward to a vote in Parliament this week, and it means that Germany would be able to send back sort of undocumented illegal immigrants, basically people who come to Germany and don't have the documents that shows that they have a right to stay in Germany, to send these people back. And that has also stoked the internal debate, the public discourse here, and also triggered quite a bit of a backlash from his political opponents, particularly Chancellor Olaf Scholz, who essentially criticized him for watering down the so-called firewall to the AfD.
Yeah. Christoph, thank you so much. As always, Christoph Raufwald there with the very latest on Germany. U.S. futures, especially NASDAQ, really lower on the back of DeepSeek from China. Up next, Bloomberg Brief, Danny Berger, that Manus Cranny in New York, and this is Bloomberg.